Okay, we are live. Welcome, everyone. My name is Phil Francois, founder and owner of Foundation Wealth Planning. We're a financial planning firm that helps people really achieve all their financial goals. We work a lot of times with young Catholic families, especially those with higher incomes. And so, what we're going to do today is go through some of the pitfalls and really the financial planning mistakes that a lot of higher income earners make. And this is not going to be an all exhaustive list, and it certainly is really for education purposes only, not advice. We love to help you individually if you have some questions. Want to reach out, you can, and also going to take some Q&A at the end and try to answer them best I can. But this is going to go through a few of the top mistakes, and there's a lot of different branches out there that'll probably touch on some different things. But we're going to kind of pop in and see what we can help with you today. So we got a little presentation, just like last time. And again, if you like these lives, let me know. And if you have some topics you want me to talk about, please give me the heads up. Let me know what you're thinking, and we'd love to be of assistance to you guys moving forward. So here we go. On to here we go. All right. So financial planning mistakes that high income earners make. There's a lot of things that people that get to this type of income level are doing really well, but there's a lot of things that they are missing on as well. And when we peel back the layers of someone's financial lives as we're starting to work with them, there's often kind of places that we can pinpoint that, okay, these are probably some places that are going to be some gaps, and sometimes they are, and sometimes they're not, and sometimes they're different ones. But these are some of the top ones that we see. So let's pop on in here. See if my slideshow is going to work. Okay, first one is a lifestyle inflation. So this is the idea that we make more and we spend more. So as income grows, spending often follows. And we have this tendency that, hey, we make more, we can now afford the bigger mortgage payment. A lot of times people also add on a car payment. They join, various clubs and gyms and things that are more expensive. They're buying more clothes. Maybe they send their kids to different schools or what have you. There's things that we always find a way to spend the money. And really an offshoot of this would be also just not really being organized. So a lot of times people aren't really tracking what they're doing, or even tracking kind of their net worth and how they're growing over time. But the key thing is the lifestyle inflation, because you'll see a lot of people that are making a lot of money, but their assets aren't really growing at the same rate that you would think that they would be. So really be cautious of that, and trying to save at least 20 or 30% of your income. Again, that's kind of a broad number. But if we can try to push those numbers up, and you would think as if you're making 150, 200,000, 300,000, that should be easy to save a good chunk of it. And for those people that are maybe in that range, you realize that it's not always easy. You really have to be actively doing that and setting up some automations. And really setting yourself up for success is a key. But I see this very commonly, so work to avoid that. Next mistake that I see oftentimes by high income earners is neglecting retirement planning. But I use retirement planning in this because it's kind of the common term. But sometimes people in this age don't really like the term retirement. So if we think about just simple financial independence, is probably a better way to phrase it that resonates more with this age demographic. But retirement is still the word we use in our industry. The common thing is, right, in when you're in your 30s, a dollar invested, if it compounds over time until you're in your 60s and 70s, it could certainly, that $1 could turn into $10 if it's invested well. And so when we're not investing in our 30s, and even back into our 20s, but certainly into our 30s, when we get that higher income, we're missing out on a lot of future growth. Your future self is going to be, a little bit mad at you. So take advantage of that now. If you have a job that has a 401k match, certainly take advantage of that. Because once we get into our 40s and 50s, it takes a lot more to catch up to what we need to do. So again, the earlier we start, time is your most valuable asset. So if you become a higher income earner in your 30s, really take advantage of that. Try to keep that lifestyle inflation down, keep your spending down. Certainly you can enjoy some nicer things, but make sure we're saving and take advantage of that so that later in life, you've got those assets built up and it's not as big a deal. Take advantage of the income while you got it. Because again, life also changes too. Industries change, your career changes. While you have that higher income, let's put some money away. The Bible is very clear about how beneficial it is, and we need to be saving parts of what we earn. Okay. Next piece here is the insurance piece. So this is also just such a common gap. And if you're employed by an employer that has really good insurance benefits, maybe this is less of a gap. But oftentimes, at your employer, maybe you can get 2 times your income or something for life insurance as coverage. Maybe you can buy a little bit more. So it ends up being maybe 3 or 5 times your income at most. But that's well short of typically what you should be looking at. And again, I use like a general goal of the 10 to 15 times income, but that's not at all specific to you. What you really need to do is kind of run a full needs analysis so that it can vary. But the bottom line is most people are way underinsured. I see this oftentimes. If you think about what you're leaving behind with your kids and a mortgage and your wife or your husband and who all's being left behind and the burden they got to pick up to take care of the family. And if you're making enough money, you can certainly get insured for a lot more. So it's kind of insuring against that higher income that you have and making sure that your family's protected. And the side benefit too, again, if you have that life insurance that's covering you and your family, be sure to always include any charities that you want to make sure are taken care of. So it's fairly simple to get an insurance policy and say you have 10% go to your parish or your church or the diocese or something. And so consider that. That's certainly something to consider as a way to also fund your charitable interest at the same time, but vastly underinsured. That's a common thing. Disability insurance, similar thing. Although maybe slightly less common if you work a W-2 job. Oftentimes you can get a pretty good amount of coverage on your income for your insurance for disability. So this is if you get hurt in an accident or you get sick, but you don't die. And which again is kind of morbid to think about, but some people overlook this concept of disability protection. And it's really insurance protection, because if you're not able, one of your biggest assets is to be able to go out and earn an income. And if that is taken away as a higher income professional, your family's going to be in a really, really tough spot. So make sure you've got disability coverage. And if you're making enough money, you could probably need to look at insurance outside of your job, because they cap it with how much you can get covered for. So take a look at how much you would get paid if you got injured or sick and couldn't work, and what the disability pays, and just see if you can live on that amount and if you need to get more or not. But it is common to see uninsured natures of that. Liability exposure is also a common thing. As we try to save money on our car insurance or home insurance, sometimes those liability coverages aren't as high as they should be. So looking to see if we can get the state maximum on our liability coverage through our home and auto, and then also potentially an umbrella policy. So look into that as well, just for additional liability coverage. So that's if you get into an accident with your car, or somebody gets hurt at your home or something. This is helping protect your assets in the event that you had that, so you're no longer a target. So trying to make sure that you've got those bases covered. It's a common mistake that people overlook their liability coverages. Okay, now tax optimization strategies on this. This we could talk for quite a while on this. I probably should just do another video specifically about some of these retirement accounts, because that does play into your tax strategy. Of course, I'm not an accountant, but I do work hand in hand with tax professionals, and a lot of this stuff does have crossover things. So make sure that you're coordinating with your advisor and your tax person on all these different things. But certainly a baseline layer that's often overlooked is not having efficiencies within our investment strategy and putting certain types of investments in some accounts and not other accounts. So being efficient with our asset location and asset allocation is going to be a big driver of just returns and being efficient within our taxes. That's an overlooked piece. Not taking advantage of some of the other advanced retirement accounts that we have, right? So maybe you're doing your 401k. A lot of times people think they're not able to do a Roth IRA because they make too much money. There is something called a backdoor Roth IRA that you may be able to still take advantage of. And really key thing, if you're able to do that, to take advantage of that in most cases. So certainly a common thing there that people are not doing that. Sometimes there's a thing called a mega backdoor Roth IRA, and that's more based through your employer plan. If you have the option to do that, it's massive. So if you're making a good chunk of money and you've got extra money to put away, the mega backdoor Roth can be very, very cool. Not all employer plans offer it. If you have questions about that, please reach out to me. I'd love to help you explore if that's something that you could do. Oftentimes we're not maximizing our deductions. Now, business deductions, that's one thing. I'm not really going to talk too much about that, but charitable interest, sometimes we're not donating as efficiently as we could be. So review your strategies on how you're doing that, whether you should be donating some assets versus cash, or how we can do things to make sure that we're maximizing our deductions. Because with the standard deduction being higher, it's harder to get the benefits with our charitable deductions. So you could bunch contributions or things like that. So there's some different ways to handle that, but a lot of times people are not very inefficient or not very efficient there. And the mortgage interest is also not always deducted because of that standard deduction piece. So just make sure you're having a good discussion with your tax person, with your financial advisor, and just make sure that we've got a good strategy to maximize all the deductions that you are entitled to. And then tax loss harvesting can be beneficial. It's kind of at the top there because there's some mixed data as to when or we shouldn't do it, when we should not take advantage of that. But it is something to be reviewing. It could be something that would help you out. And then also times maybe when your income is down to maybe do some gains harvesting or things like that. So just some things to keep in mind. Again, everybody's situation is specifically different there, but these are a lot of pieces that are overlooked and not always maximized. So review some of these pieces. Okay. Now, the final one, had to do this again. I'm not a lawyer, but this stuff comes across my desk all the time, and I just have to say it. You need to work with an attorney to get these documents done, but it's so common to see people that don't have their will. Sometimes a trust makes sense, sometimes it doesn't, but at least having the discussion to see if we should get a trust, that's often not done. We don't assign power of attorneys or guardians. And usually if you go to an attorney or there's some online places you can do it, usually these are kind of all done as a package deal to get all these things done. And once these are just your basic estate documents. And so it's oftentimes that people think that if they talk about this stuff, then it's like they're going to die right after they talk about it. And the honest thing is, right, we're all going to die. We don't know when. So just be intentional with how you take care of your family. And the will and the trust, it's helping direct assets and things from when we pass away. Having power of attorney if you're incapacitated and not able to make decisions on your own, that you have somebody there that can make decisions that you would make. And so not only that, the piece of that too is not only having the documents done, but then talking to your power of attorney about what your wishes would be in that situation. And then guardians, right? If you're not the one that's deciding who takes care of your kids, then the state does when you pass away. They're the ones that pick it. So you should just rip the Band-Aid off and make sure you're the ones that's deciding where your kids are going to go if something happens, and not the state after you're gone. Very common thing. So don't be nervous if you've not done it yet and you're nervous about going to the attorney and you're ashamed or whatever. Don't feel that shame. Just go get it done. It needs to be done, and talk to them about it. And also coordinate with your advisor too about if there's things you should maybe be asking or coordinating based on your situation. I think that's kind of a common thing. But again, we're not lawyers, but this stuff is highly connected with your financial lives and accounts and things like that. So work together with them on the team. And okay, so avoiding some of these pitfalls when we're thinking about these major mistakes that we have of having the lifestyle creep and not taking advantage of some of the various tax advantage accounts that we have and the various tax things associated with our financial lives, estate taxes, all the things that kind of come in. Having that comprehensive plan is the key. And oftentimes the advisor can take almost the quarterback approach. So again, we're not tax pros and we're also not lawyers, but because it all intersects with your finances, we can try to get this as a coordinated effort and get everybody on the same page and have a comprehensive plan so there's no gaps. That's the whole thing. is trying to make sure that we're being efficient and filling the gaps that there may be on your account. And have that team, right? So if we have that comprehensive plan, we have that team that's going to really help make sure that we're maximizing where we're going. And then review and adjust regularly. Again, your advisor is probably going to be the person you talk with most, but figuring out when's a good time to also check with your tax person, and when you may need to get updated documents from your lawyer, and just having those constant reviews over time, and making sure that as things change, that you're updating as we go. Okay, now, if you haven't done some of this and you're thinking, hey, I want to get some help with that. I want to make sure that I am maximizing this high income that God has blessed me with, and that we're able to save and we're able to give. We do so within a tax efficient manner as best we can, and make sure we got our other documents in place, and just try to help, again, coordinate with your team to make sure we got gaps. We'd love to stay in touch with you. So first of all, whatever platform you're following me on right now, please hit the like and the follow button. That's kind of how, again, this educational live sessions can get put out there to everybody else. So please make sure that you like and share and follow. Also, you can go to our website at foundationwealthplanning.com, and there'll be a pop-up there. You can sign up for our newsletter. We can send out the newsletter to kind of stay informed if you're just kind of wanting some of that just free education and just kind of helping you learn and stay motivated on your financial life. Love to kind of have you go there. And if you want a free assessment, this is how we just assess your issues and opportunities. We do a consult. It's free. We hop on a call. We kind of go through what you've done thus far. We then take some of that, review where you are, just help bring you some issues and opportunities that you may have in front of you, and just see where some gaps might be. And then from there, you can decide how you want to take action. But that's a free assessment, and I would encourage you to do that. So you can find on our website, you can go to contact us and submit an inquiry there to talk about setting up a time for that free assessment. We'd love to be of assistance. Also, you can just comment, assessment on whatever platform you're watching this, and we can coordinate a time to find all that. Okay, so with all that said, I'm going to do just a little bit of a hangout for questions. The whole goal here is to be on for about 20 minutes or so, which I think we're close to that. Love to answer any questions that we may have regarding some of these things or any other offshoots. So if you have any, feel free to send them in. I'll see if I can see them here. Okay. Well, I don't see any right now. Again, I am kind of getting these lives up and running. So if you liked this type of content, again, please like, share. I'm going to try to do these more often, and let me know how I can help. And thank you so much for everybody to stop by. I see there's a few people that stop by. Thank you all for coming, and hope you have a blessed Holy Week. And thank you, and have a great day.